Hi, it's David Starr here, and it's been quite a while since I've put out a video. And so I figured I would take some time today and put something together on gold. Earlier today, I was talking to a buddy of mine, Tony Laporta. Tony has been trading the futures for years and years and years, far longer than I have. He was a bond trader for many years, and if you want to check out his stuff, it's at tonylaporta.com. Definitely worth checking out. But Tony and I were talking, and he said that he's looking for gold to start heading up in 2016. So he's been talking to other folks he knows, and they've been looking for this, and it kind of matches with what I've been looking for in the from an Elliott wave perspective. And so we said we would certainly check in with each other as it got closer to possibly turning up. But I also want to walk through the logic here and also some of the trade setups, because we may have a very well-defined Elliott wave trade setup that really anyone can follow for how to get long gold. So what I've got here is I've got a weekly chart of spot gold, and I'm missing a little bit of the left part of the chart that ideally I'd want to have. My data provider doesn't have it right now. It's really not that important. What is important to know is that off to the left of the chart there was a move down here and then a move back up that makes for waves 1 and 2 of an Elliott wave 5-wave sequence that we're trying to count to the downside. So we count down 3, 4, and 5. Now, there are other ways we could possibly count this. We'll go into them in a bit, but really the material observation here is that this is a 5-wave move. That no matter how we count it, this section here in the middle is the longest and the strongest, and that this bounce that we had right up here did nothing to come up and overlap the action that we had up here. So whatever that gives us, we had a third wave somewhere here in the middle, and whether that ended here as I've marked it, or whether that ends us here or somewhere else, this is really a classic 5-wave structure. Now, 5-wave structures, we know, are in the direction of the trend. And so since this comes from an all-time high, we're expecting that this tells us that there is a larger trend down from the high. But we also know that when 5-wave moves are over, that there's going to be, even if it is in the direction of trend and it's going to continue, that there is going to be a counter trend reaction. And when you spend multiple years, traveling close to 1,000 points in gold, that counter trend move is likely to be quite big. So there's, even if it's counter trend, there will be a real trading opportunity here, or is likely to be. And so that's what we want to look for. Now, the important thing in trying to find a way to take advantage of this is figuring out when this 5-wave move down ends, because that's going to be the opportunity to get long. Now, I think we're going to have a chance to do that if the pattern I'm showing on this chart here ends up coming to fruition. And what it is it suggests we may have a pattern called an ending diagonal coming together in here. And if it is, there's some trading techniques that we can use. And we'll discuss this ending diagonal pattern in a minute. But let's kind of look at some of the other possibilities here. Now, we don't need to dig into them in detail because I think we're going to reject most of them, but I do want to show you some of the other scenarios that I was looking at. So certainly one of the scenarios that I was actually trading against over the past several weeks was an idea that, we had this 1 down, then 2 up, 3 down, and then we made a triangle in here. a triangle like this. And there were some reasons to like this. You can see we have a 3-wave move up, 1, 2, 3 to the upside, 1, 2, 3 to the downside. And when you start to get 3-wave moves in both directions, that starts to suggest some sort of a pattern like a triangle. And we know, just from observing it over time, that the metals, the metals really like to form triangles. So another 3-wave move up, and when we get 5 3-wave moves, that potentially completes a triangle. When you complete a triangle, you need, triangles are always the next to last move in a sequence, a 3-wave move, or a 5-wave move down in here, a thrust out of that triangle. In theory, could have already ended this 5-wave sequence to the downside back here at the end of 2014. And what I was tracking for a little while is the idea that we could have had a 3-wave move up, 3-wave move down, even though it made a new low. This could have been a pattern called an expanded flat, which would have had this counter trend move heading up into about the 1300 area. And so earlier this year, when we came up here like this and came back down, I was getting along up in here trying to see if I could catch this ride. I got it from about 11:13. I ended up getting out end of last week at what was it, 11:40 something. I mean, I made some money on the trade, but given how far this fell back down, it is now not acting like this action that is starting 1, 2, 3. We know third waves really tend to take off. This one isn't doing that. We can't really rule out the idea that this might that this pattern might still be going on until we come back below these swing lows down here. But honestly, it looks like it's going to. If this really starts taking off to the upside, then we can start looking for 1300 area again. As you can see, my confirmation level, and I was in before them, is up here at 1232.30 here in the again in the spot gold. The futures don't deviate that much from spot here in the metals, at least for the front month. So you can probably use similar levels in the futures. But if we start really breaking out above these levels that we had just a few weeks ago, maybe we can look for the 1300 area now. But if we start breaking down below here, then we're really going to be likely on track for a lower print, taking out these lows that we saw here, and that is either the ending diagonal scenario that we looked at before, or perhaps this is still that triangle that we looked at earlier, and just a deeper thrust down. But this also is not acting right to the downside. That is, if this is a 1 down and a 2 up, and we have more to go, then again, like we said earlier when we were looking at the smaller degree stuff to the upside, third waves really get going. And this bounce that comes back and overlaps this other junk is not acting like a third wave to the downside, and therefore this looks less likely as well, which brings us to the scenario that, whoops, not this one, right here, the scenario that I was mentioning to begin with, this ending diagonal scenario. Now, ending diagonal is a very specific pattern with very specific rules. And they are an alternate way of sort of explaining some of this action in here that we said earlier looks like a 3-wave move in both directions. And in addition to a triangle, another place where we see that is within an ending diagonal. And very specifically, an ending diagonal, the rules are you have 3-wave moves in every direction. So you can have a 3-wave move down here like this, a 3-wave move up like this, a 3-wave move down like this, and we count these out also as a 5-wave move, but not a typical 5-wave impulse. So wave 1 is 3 waves, wave 2 is 3 waves, wave 3 is 3 waves, wave 4 is 3 waves, and then wave 5 would be expected to be 3 waves as well. Now furthermore, okay, all of these 3-wave moves, if this is an ending diagonal, have to follow very specific rules. Now that is, all of them have to be 3-wave moves as we talked about. Wave 3 has to come down beyond the end of wave 1, but it must be shorter than wave 1. So 3 has to be shorter than 1. Wave 4 must come back up and overlap this low of wave 1, and we can see it does come back above it. So this is different from an impulse where you have to have no overlap. Ending diagonals must have overlap. Now furthermore, wave 4 must be shorter than wave 2. Then wave 5, as we said, has to come down as a 3-wave move, and it has to make a new low here below 3, and it must also be shorter than wave 3. So if we get a move down in 3 waves that meets all of our requirements, then we can look for a turn back up. And really at this point, that's dependent on this next leg down here. If it is a 3-wave move to a new low, and it otherwise meets our requirements. So we can dig into those a little more now to qualify exactly what it would take for this to meet our requirements, and then talk about how that leads to some very specific trading setups that one might want to follow in order to get long gold if it does follow this scenario. So the first thing that we want to look at, we've said that this move must come down and make a new low beneath wave 3. So we have to come down below this swing low, really from the summertime. So that's the first thing that we need to see. The second thing that we've talked about is that, and let's actually get a little more space here, is that wave 5 must be shorter than wave 3. So in order for wave 5 to be shorter than wave 3, they would be equal down here at 9:56:54. So we've got now a very clear box where this thing needs to end from this swing low here, and we can measure what price that's at in a minute, down to 9:56:54. So again, these levels are from spot, but you can measure similar levels in the futures, or just sort of ballpark them. So we're talking about levels from 10.7245 down to 9:56:54 in spot. So we're looking for a move into that window. The second thing that we want to see is we want to see this occur as a 3-wave move. So that means that we've got this leg that started down here. We want to see a little bit of a counter trend bounce, and then another leg down like this. So that's the action that we want to see, a 3-wave move into this box, and then we would expect a turn back up. So if we get that action, then pretty good idea that we have a trade on or a trade opportunity. And then it's just a question of where one might want to try and get in for what we said could be a pretty good counter trend bounce here. And there are a couple of classic ways to try and trade an ending diagonal. So let's kind of go through them. The first and most aggressive is to look for this move to a new low. So once we break this 1072.45, okay, we know the trade is on. Depending on how experienced you are with Elliott wave, if you're comfortable counting this move down, the C wave within this ABC 3-wave move down, look for it to kind of reach the spot where it looks like it's ending. But in any case, somewhere once we've broken this 1072.45 prior swing low, you know that you have an opportunity to the long side, and you know that you've got a spot where you're wrong. So you're obviously wrong on the idea that this is an ending diagonal at 956.54. So you just look at that, look at where below 1072.45 you want to get in, where this looks like this is ending. Measure the distance between where you think you want to get in and this 956.54. You figure out how big size you want, knowing that this is your risk, and size the trade appropriately, knowing that you're wrong beneath this level, and just let it go or not, and take you out beneath this low where it's gone too far. So that is one way to trade it. It's the most aggressive entry. It's going to get you an entry closest to the stop, but it's going to be the highest risk because you haven't yet seen the trade head up, in the direction that you're looking for in order to start to confirm that the move is over. So this is the most aggressive entry, but probably the riskiest as well in terms of probability of success. It's the least risky in terms of the amount that you may lose per contract if you do, get into, for example, a gold futures trade. Now, the second way to do this is if this is a 3-wave move down, down, up, down, your second opportunity is on a break above this intermediate swing high within the 3-wave move down. So that's the second opportunity. Again, that gives you a wider margin for your stop. May or may not, because at that point, let's look at this differently. At this point, your stop is actually down at the actual low that was registered here, because, pardon me, if this is done as a 3-wave move, we shouldn't come back below here. So, again, you may have tighter or looser depending on how this is configured, but you have a little bit better idea that it's moving in your direction. And then the even more conservative entries are sort of right up here at this trend line, the descending trend line that connects the end of wave 2 and the end of wave 4, on a break through that, and the most conservative would be on a break above this wave 4 swing high here. So on any of those entries, anything but the most aggressive, your stop is on the actual low that we register down here. Again, so long as it meets the criteria of a swing low on a 3-wave move down that comes below 1072.45 but not 956.54, and then depending on your own risk preferences, how much confirmation you want to see versus how much risk you want to take on, which of these entries you want to take. But on any of these, this, other than that most aggressive, your your stop is here on the most aggressive. Your stop is at 956.54. And that's how I would be looking to get into this trade. And as I said, it could be a good size bounce if we look at some, try and look at some possible objectives here. Give me just a second for this thing to load. If we try and look to the upside, if we get a bounce, let's get some measurements in here. Depending on where we end here, but if we end, somewhere roughly in this region, 50% of the decline gets us up to 1477. 61.8 gets us to 1582. Either of those is certainly a good sized tradable bounce up off the 1000 general area. So even a 38% retracement gets you to 1373. All of those are certainly very meaningful bounces out of this area. Again, I'm expecting it to come as a three-wave move. Maybe not all the way up to 1582, although that would certainly be really nice. But either way, again, 300, 400, 500 points, very tradable, even if that's only a counter trend move. We talked about some ways that if this is an ending diagonal, you can get in here. Where we might want to put some protection in case this idea is wrong. Again, even though we think we can identify some patterns and have a little bit of confidence in them, especially things like ending diagonals, because the rules on ending diagonals are fairly specific, we can have a fairly good idea that it looks like an ending diagonal if and when we get in. And then also, by following some of these rules and setting up some protection, we can further try and mitigate that risk and try and make sure that we know the right levels to get out if things are not proceeding according to plan. So that's what I'm going to be looking for in the months ahead, perhaps in sometime in 2016. According to Tony and some of his friends, if that comes together. And this is the kind of pattern that I'll be looking to try and get me in. Now, at least very short term, I'm short gold right now. But again, I'm looking for a 5-wave move that's been developing over the past several years to come to an end fairly soon, and using that as a way to get into the short side. And hopefully, if you like the idea too, this may help you get in for what could be a decent counter trend bounce in gold. I hope that helps.